In an industrial estate on the outskirts of Johannesburg lies this warehouse belonging to the PG Group. Here are stored thousands of car windscreens waiting for orders from customers. When the rand strengthens against the dollar, this glass becomes more expensive to customers around the world. It means this company has sold 400,000 fewer units around the world in the last year. That's 40% of business lost. This is one of South Africa's biggest exporters with a turnover of 3 billion rand. It says the exchange rate is suffocating its business. This company exports windscreens to Europe and raw glass to India and South America. Now it calculates that it's lost 75 million rand, that's about $10 million in the last year, through the exchange rate alone. It all adds up to a difficult year with a double hammer blow of recession and the rand. CEO Stuart Jennings has spent 30 years in the glass game. He says the last year has been the worst.
The run we've had in the rand the last 18 months has really eroded our margins and put us in a very, very critical position.
Can you give us some detail about how much damage the exchange rate has caused in the industry?
Well, I think we've got to go back to the first quarter in 2009, where we had a very competitive currency. And if you look at the movement between them and now, there's a 40% strengthening. And the rand continues unabated to strengthen, really not related to the South African economy at all, but because of liquidity inflows from overseas. And that very significant reduction in our margins, coupled to significant increases that manufacturing has faced from Eskom, from local municipalities and from Transnet, has squeezed margins to a point where a lot of companies are either getting out of exports or cutting back dramatically to survive.
Stuart Jennings also represents 200 major South African component exporters.
Well, if we look back through the recession, if I represent NARCAM, which is the component industry, we've lost about 22,000 jobs in 18 months. It's nice to see there has been some pickup in automotive build, but I think the loss in volume and the loss in exports has meant that we've had very little pickup in jobs at all. In fact, we see more job losses in our sector if the rand continues with its strength.
How many jobs could be lost?
Well, I think we could have another 10,000 job losses just in the component sector from export cutbacks. And then in general manufacturing, I think you can double, treble that because quite honestly, not only are exporters in trouble, but the flood of imports coming in from the strength of the rand and from countries that have unfair incentives has made it very difficult to compete.
What could be done about the currency?
I mean, it is difficult because I appreciate that there is a currency war going on in the world, but I do believe we need to take a lot more assertive action. We've got to be a lot more radical. And certainly, I believe we've got to call an emergency MPC meeting and cut interest rates by 1%. The government also needs to signal a level of the rand, and I think we've got to signal that we need a rand of around 8 rand to the dollar, and obviously relative to the other currencies. That will not be over-inflationary. We have done some modelling work, and I think there's so much spare capacity in this economy, and the need for jobs is desperate, that it is absolutely essential that we do something to make this currency more competitive.
Well, given that the South African government is loath to interfere in the economy, what do you think could be done?
Well, unfortunately, we've been the only government that hasn't interfered with their economy. If you have a look at what's happened in Europe, the United States, and more recently Japan, and particularly China, there is massive intervention in the economy. Now, we cannot be the white knight in a sea of reality, and therefore I think it's essential that we do intervene, because what we have at the moment is a change in the world economic order, and we see that continuing for the next 5 or 6 years, and the longer we delay, the worse it's going to get for us, because sometime in the future we're going to have to intervene. We can't continue to have this rand strength and this loss of jobs happening in our economy.
Looking to the future, what do you think could happen?
Well, I think if we leave it as it is, I think the strength's going to continue. There's just so much liquidity in global markets. If we have a look at what's happening in the United States in particular, and now even Japan, that liquidity is going to increase. They're going to chase the high interest rates in South Africa and the performance on our equity market, due mainly to resources. And that's going to continue unabated unless we do something quite dramatic to intervene.
This is the cause of all the economic pain. Since the beginning of 2009, the rand has gone from 10 to the US dollar to under 7 rand to the dollar, the highest in 33 months.
You know, I think it's true to say that if interest rates are going to be dead low in the US and elsewhere for, years and years to come. I mean, we're talking about a zero interest rate environment now and then quantitative easing. So how far are we going to have to travel before we get back to an environment where rates start to rise in those economies? So if you're managing a big pension fund in the US, and we know that there's been a big retreat from equities and into more fixed income type product, you must be looking at the high yield that is offered on sovereign debt in markets like South Africa, Brazil and others. So I'm afraid this money is coming and it's not paying any attention to the local news flow with regard to our specific prospects. So I'm not sure whether it's good news or bad news. All I'm saying is it looks as though the strong rand is here to stay for a while.
Exporters like this say 8 rand 50 to the dollar would solve many of their problems. They want government intervention, but they are very unlikely to get it.